What if I told you could buy an investment property without showing tax returns or a W-2? That's where DSCR loans come in. Debt service coverage ratio. These loans are designed for real estate investors and don't rely on your personal income. Instead, the property just needs to pay for itself, meaning the rent covers the mortgage. That's it. We laid the groundworks for understanding what DSCR loans are and who they're for. Now we're going to dive deeper into how they actually work, especially if you're serious about using real estate to build passive income or grow your investment portfolio. A DSCR loan, again, the definition of DSCR stands for debt service coverage ratio. It's a loan mortgage based on a property's income, not your personal income. So the key idea, the key takeaway here is there's no tax returns required, no job history, no DTI, which stands for debt to income calculations. And who are DSCR loans best suited for? That would be ideal for real estate investors, your self-employed borrowers, borrowers using LLCs, and anyone with non-traditional income. Now, how does DSCRs work? The key formula here is DSCR, equals gross rent divided by PIDIA. And PIDIA stands for principal, interest, taxes, insurance, and association fees. So, in a nutshell, that's just your rental income divided by your full monthly mortgage payment. And let's say your property rents about $2,000 a month. And the PIDIA, your principal, interest, taxes, insurance, and any HOA dues, is $1,500. That gives you a DSCR of 1.33. Now, most lenders want to see at least a 1 and above. But the stronger your DSCR, say 1.1 or higher, the better your rate and options are going to be. Why are DSCR loans so popular with investors? You don't need to show W-2s, tax returns, or employment history. As we went over prior, you can buy in your personal name or through an LLC. And it works for single-family homes, small multifamily properties, and condos. But you should know the trade-offs. Now, rates are going to be a little higher than traditional loans. You'll usually need 20 to 25% down payment for a DSCR loan, as it's an investment. It's not a primary or a secondary sort of deal. 20 to 25% down is usually required. And I say that it's not for primary residences. This is strictly investment. So if your goal is to house hack or move in, this isn't going to be a right fit for you. But if you're trying to scale your rental portfolio, then it's right up your alley. It's perfect. Now, property eligibility, what you can and can't finance with DSCRs. These loans are great for long-term rentals, and many lenders now allow Airbnb or short-term rentals if the numbers work. You can also finance properties that are already rehabbed or turnkey. Now, what is not allowed, owner-occupied homes and raw land or unapproved land. Again, this is strictly for income-producing properties that stand on their own. You're renting these units out, ideally. The required documents to get started, what you'll need to submit a DSCR loan application. If you want to apply, here's what you're going to need. You're going to need a rent report or your leases. So this is going to show what income the property is bringing in. LLC documents, if you're buying through a company. A valid ID, insurance quote, and either a contract or property address. And let's talk about your goal. Is this for a purchase or refinance? Rates are going to depend on your DSCR, credit score, and down payment. Most lenders are going to want at least a 660 credit score and offers up to 80% loan to value for purchases. Now, there are even interest-only options if you want to keep monthly payments lower early on. And yes, we can help with the rate term refinances and cash outs as well. Some questions that get asked a lot in the field of DSCRs. Do I need a lease? Not necessarily. It definitely does help. But if the property is vacant, a market rent analysis can qualify it. Can I use this for Airbnb? Yes. Many lenders allow it as long as the property qualifies. There's some lenders that shy away from it. For the most part, yes. And that's where you would discuss this with a mortgage loan officer so they could get you with the right lenders that do. How fast can I close? In some cases, my team, we've had clients close in 2 to 3 weeks. As long as your documents are prepared, ready to go, and we're submitting them thoroughly through the underwriting, then 2 to 3 weeks is a fair number to close a DSCR loan. And finally, if and when you are ready to submit your deal, if you've got a property in mind, or even if you're just running numbers, reach out and I'll help you break it down. Whether it's long-term rental, short-term, or refinance, I've got you. NEXA Mortgage LLC got you. Got a great team behind. Email me anytime or schedule a call using the link on the screen. Again, it is calendly.com/NikkoBeans Mortgage. I'm trying to fix up this QR code so you could just scan that. And otherwise, I'll also put it in the link in the description as well. Reach out to me. Again, I'm Nikko Jones, your go-to DSCR loan officer, powered by NEXA Mortgage. Let's help you scale your real estate goals. I look forward to discussing with you. You have a great rest of your day.